Well, thank you very much. As Thomas has said, my name is Lavan Thasarathakumar. I am a senior advisor in the digital assets and blockchain practice at Hogan Lovells, which is an international law firm. And I'm also the director of government and regulatory affairs at GBBC Digital Finance. Thank you very much for all sticking around for this session on blockchain and trade. And thanks for being here, because there's no one here with me other than on the screen here, so which is slightly strange, but I'm sure it's going to be great. And with that, I will go over to my two panelists who to quickly introduce themselves. Peter, perhaps if I come over to you first to do a brief introduction.
Sure. So currently I'm the chairman of Venom Foundation, which is a layered zero chain out of Abu Dhabi. Previously, I started my career at Goldman Sachs. Then I was a professor at the University of Chicago, ultimately Northwestern. Then I was global head of fixed income at Barclays, global investors, global head of research, and global CIO of fixed income. Ultimately, we sold that to BlackRock, to Larry Fink, where I worked for Larry for 2 or 3 years as global CIO. And since then, I've been involved in fintech and technology, and most recently, obviously, infrastructure for Web3.
Super, thank you very much. And Peter, if I come over to you. Sorry, Thomas.
Okay, thank you. Good afternoon. So I'm the director of the Office for Financial Market Innovation and Digitalization of the Principality of Liechtenstein. I'm now been working for 10 years for the government of Liechtenstein. And I'm basically responsible for innovation in fintech, fostering the fintech ecosystem, and also the Liechtenstein Blockchain Hack was one of my projects.
Super. Thank you very much, Thomas. Well, we've only got about 20 minutes in this session, so there's a fair bit to cover, and we're going to go through it in a bit of a canter. So I won't be asking questions in the audience, but I will keep an eye on this monitor here where there are questions coming in, and insofar as I can integrate them into our conversation, I will do. So certainly do send them through here. But this discussion flows on quite neatly from the last one, which was hosted by Demetrius, which was on the tokenization of real-world assets. Here, we're going to narrow down that conversation slightly and looking at blockchain and trade, but in terms of that, the tokenization of commodities. And so perhaps if I kick things off by coming over to you, Peter, and just looking at, right, we talked about tokenization of real-world assets and some of the benefits around that, but why is it that we need to tokenize commodities? What are the benefits that we're looking at there? What are the efficiencies that we can earn, we can gain, and why is it different?
Sure, thank you, and thanks for the invite. Pleasure to be with everybody. Well, I think you have to start with the infrastructure that the tokenization will rest upon and be integrated to. So if you think about, blockchain and its sort of core, attributes, which is immutability, transparency, and ultimately fractionalization. So by taking the business process of commodity trade and putting it on chain, you immediately get an end-to-end, immutable, transparent record of everything that took place. So you kind of start with that. But then once you have that done, then you can start to bring the tokenization basically of the financial instruments, and in this case in particular, the letters of credit. And so those letters of credit become smart contracts. And so smart contracts, in my view, are kind of the hero of Web3. Because one, they're basically code, so you can program them. So somebody who's been involved in global fixed income for quite a long time in different venues, that means that money is programmable. So you can program the duration of it. It also means that you can embed AI in those smart contracts. It also means that smart contracts don't execute unless conditions are met. So it also reduces disputes in the overall execution of a contract. So instead of distributing, well, was the contract executed as promised? It's not even executed. unless the conditions are met. So you get transparency, you get efficiency, and you get more security and less dispute. So I think it's actually a big deal. And for commodity trade, it's a big deal because it's also going to drive automation. So the process will become much more automated, both through the smart contract itself and through the embedding of AI ultimately in those smart contracts, whether that's through matching engines, so matching the right buyers with the right sellers, etc. So I think it's a very transformative implementation of a technology like blockchain and like smart contracts.
Yeah, absolutely. And Thomas, I mean, you were behind architecting Liechtenstein's platform on tokenization of metals and other assets. Was this the basis under which you had gone forward with that? Does what Peter's saying there resonate with some of the kind of starting discussions that you were having?
So basically, I was responsible for the Blockchain Act, so kind of the regulation of blockchain in Liechtenstein. Not about the platform, but we thought about these applications when we drafted the law. So basically, the Liechtenstein Blockchain Act was drafted for all kind of applications, like finance applications and real economy applications. And when we have seen, those. If you talk about the real economy applications, we always talk about real asset tokenization. And this was the more exciting use case, to my opinion. So we had a look at commodity trading when we drafted that. Basically, to my opinion, before I come to the law, what I find exciting about tokenization trading or commodity trades is about it's so easy to get the proof that you have the funds and you have the commodities. So we can simplify a lot the trust, the process, and creates a huge level of trust by using tokenization. And what we did in Liechtenstein to create that trust is that we introduced several layers that addresses those kind of tokenization of real-world assets. That means we have introduced a civil law of tokens that is so broad that it covers all kind of applications coming from virtual assets to real assets tokenization. So what we call that is the token container model. So we defined that the token is just a representation of a right, in this case regarding the physical asset. And then we defined the civil law rules. So is it possible to own a token? Can I delete a token? Just general for every token that we know. And then on top of that, we introduced a model to synchronize the digital layer and the physical layer. So that's it's clear that if you buy a commodity token, that you know what is the potential conflicts if you have the real assets, and how can you resolve them. As a second layer, we introduced a regulatory rules in terms of physical assets. I mean, especially the physical validator is a role that is regulated, that is there to create trust, so that everybody that buys a token can be sure that the commodity is there. So you don't need to check it by yourself. And this is what I meant before. This is the unique level of trust we can create with tokenization. So it's a combination of both of civil law and regulation of service provider.
So when you were talking there, Thomas, one of the things that became apparent to me is around the idea of the kind of property rights around this. I say this largely because we've had a lot of this conversation in the UK with regards to the property rights pertaining to digital assets. Earlier in the summer, the Law Commission of England and Wales had recommended the creation of a new category of digital called data objects to kind of solidify the common law interpretation of what property rights were pertaining to digital assets. But I think what's interesting here is that same issue applies in tokenizing commodities. And whilst the framework created here in Liechtenstein allows you to be able to operate there, there is a cross-border issue in terms of that, in terms of what rights a holder has outside of Liechtenstein. So were these some of the issues that you discussed, and how did you come about dealing with it, and what is the solution to that?
Yeah, if you allow, I just get a bit technical, or from a legal point of view. So many people think that tokenization is a technical process, but it's essentially also a legal process. So if you look at the tokenization of commodities or commodities trades, we have the layer of the commodity. That's the physical item thing. Then we have a layer of physical delivery of the commodity, but we have also the legal layer. And usually, and this is specific in each jurisdiction, that what is crucial, that the ownership right of, or the ownership of a commodity is transferred from a legal perspective. And of course, just to make a contract is not sufficient. Usually you need both the legal contract and the physical delivery that the ownership right is fully transferred. And what happens with a token is not touching the physical layer. It's more related to the legal layer of the legal contract, because the ownership rights from a legal perspective is usually it's included in the contract. So in the contract, we say, okay, this is transferred when this happens, and so on. But it makes it a bit complicated to find out what is the status of this transfer, of the settlement, from the financial market. And so with tokenization, we create a new layer of this legal contract. This means we define that this rights that we transfer as a part of the contract is a known object. And this can be transferred and then seen as such without knowing the contract. And so we have kind of a settlement that is made on chain using blockchain. So it's easy to prove what is who's the owner of this rights. And this can be in general can be seen as the ownership right. It can be the right to possess a commodity. It can be the right to transport the commodity. So we have a kind of a new layer that increases the transparency and security of these legal transactions. And this is what we have regulated in Liechtenstein. So that this complex is clear and creates the highest level of trust. But if you look at international trades, every country, every jurisdiction has different rules. So we need to kind of to harmonize that. So if a trading counterparty is in one jurisdiction and the other is another, so you need to define what happens if I transfer the token. What is the tokenization? What happened there from a legal perspective, and what's the legal implications if we do that? And this makes it a bit complicated if you don't talk only about virtual assets, but about a commodity token. And so this is just the aspect we need to harmonize throughout the world. That is clear what happens with selling and buying commodities token. So and until then, I think we can also work in kind of free zones to create this legal certainty. So there are spots where this commodity trades happen now today. And we could use such a kind of a framework that's this kind of commodity trade can happen with the highest legal security without this harmonization. But of course, if this harmonization happens somewhere, then it's kind of a breakthrough for this international commodity trade.
Yeah, absolutely, and I'm sure the words harmonization is well received by a number of people in this room. Will be an incredibly difficult thing to do on this particular matter. Peter, kind of changing tack slightly, we've talked about the technical issues that we've got to overcome, the technological issues, and we've talked a little about the legal and regulatory aspects around this as well. But what else do we require to be able to move this on and be able to allow for tokenization of commodities to scale and to become widespread?
So I think, obviously, as Thomas is articulating, that legal framework and those legal structures have to be put in place. My own view is they will ultimately happen. I've lived through a lot of technological innovations, and the technology is always ahead of reg tech, and the regulation ultimately does catch up because the technology is too important. But that's a huge piece. I think second, end-to-end support, and end-to-end solution, that using this technology and using smart contracts and blockchain as an infrastructure can really reduce costs dramatically and drive a lot of efficiency. And as you listen to Thomas, you realize you can remove a lot of the inefficiency of disputes and resolving disputes, et cetera, because you can embed so much in the contract itself because it's code. This is very hard to underestimate, in my view. And so what that's going to drive is, for the first time, I think, the transparency and the trust. As it increases, you'll see the investment opportunity set expand. In other words, a lot of pension plans or sovereign wealth funds that may not look at the market of investing in a commodity trade will do so. And so that'll also be a big driver because it'll attract more capital. I think ultimately you're going to want to get the support of governments, not just from a regulatory point of view, but actually supporting a platform and different platforms in order to conduct it. And then I think, a big win for the space is to get the incumbents involved. So, SAP, for example, has thousands and thousands and thousands of clients. And if you can bridge this technology to an SAP and get them on board, then you can open up the market to small and medium enterprises that are the trade gap in commodity trade is almost $2 trillion. And I think that's a very conservative estimate. So if you can now, because of the reduction in cost, increase transparency, better financing, you can bring the SMEs into this process. That is a dramatic transformation, and closing that trade gap would be a dramatic thing, because a very, very large percentage of GDP in both advanced countries and less advanced countries is due to SMEs. So the more you bring this kind of technology to it and this kind of process to it, and you bring an SAP that knows the business process itself, and you bring that onto the chain and onto this technology, you're going to give access to the SMEs, and that's a big deal for a lot of countries.
Yeah, absolutely. I couldn't agree more. We've only got a few more minutes left of this, but if I just have one more question to ask to both of you here, and at the moment, our tokenization process still partners with the traditional banking system. What are the steps that we need to take to be able to move this towards move this on, so that we're able to fully utilize the benefits of tokenizing this sector?
Yeah.
Thomas, if I come to you first. Yeah.
Do you want to start? Maybe I start
first, Thomas. Go ahead, Thomas.
Okay, thank you. So we have to see that. Can you see me? So because your picture is frozen, but
yep, we can hear you fine.
Okay, that's good. So I think if we tokenize only the commodities and use the traditional banking system as to make the counter trade, we only take the one part of the potential of blockchain and tokenization. So without using banking on blockchain, it's a bit a pity to tokenize. So maybe you have to consider that the beauty of blockchain comes that you can synchronize digital money transfer and the commodity token transfer. So, and this is just the fundamentals. We need digital money as a fundament for this commodity trading, so that you can really automate the trading process. And this is just a fundament. And on top of that, we need, of course, all kind of financial services that we know today from the banking sector, but they need to be based on blockchain because then it's more efficient. So the kind of a blockchain-based banking or financial services architecture is necessary to unleash the full potential of this.
Obviously. And Peter, any final comments on that?
I just say I agree with Thomas. I think that certainly every other week, somebody talks to me about a digital bank and is working on a digital bank. So, this very quickly, I want to run over, but this technology transformation is as big as anything I've seen in my career, particularly for financial services. And so all these things are changing. And so will banking, and digital will happen. I think we all wish it would happen faster, but it's going to happen.
Super. Thank you very much, Peter. All right, I think that's all we've got time for in this session today. So thank you very much, Thomas and Peter, for taking part in the discussion today. And I'll hand back over to the Blockchain for Europe team for the next session. Thank you very much.